The real estate market is on the brink. Or is it? Prices are hitting record highs, mortgage rates are climbing, and yet, somehow, the market refuses to collapse. If you're waiting for a 2008-style crash, you might be in for a surprise. In this video, we're going deep into the shocking truth behind the housing market's resilience, what's keeping prices high, and whether a crash is actually coming in 2025. Trust me, this isn't what they're telling you on the news. Stick around to the end, because what I'm about to show you could impact your financial future. Let's start with the basics. Housing affordability is at its worst in decades. Back in 2021, mortgage rates were under 3%. Today, we're looking at current rate percent, and that means monthly payments have skyrocketed. You'd think this would drive prices down, right? But nope, home prices are still climbing. So what gives? The truth is, demand and supply are completely out of whack. Homeowners who locked in ultra-low rates during the pandemic are refusing to sell, which means there's barely any inventory on the market. In fact, we have historically low housing supply right now. That's keeping prices artificially high. But wait, there's more. Even if some homeowners wanted to sell, there's another problem. We aren't building enough homes. After the 2008 crash, builders scaled back construction, and they still haven't caught up. That means fewer homes available for buyers today. And get this, regular buyers aren't just competing with each other. Wall Street is in the game too. Companies like BlackRock and other hedge funds have been snatching up homes in bulk, not to live in, but to rent out for profit. In some cities, corporate investors own over 20% of single-family homes. Think about that. The housing market isn't just about families buying homes anymore. It's an investment vehicle for billion-dollar firms. Oh, and one more thing, demographics. Millennials and Gen Z are hitting their prime home-buying years. That means a whole new wave of demand is coming, which could keep prices from falling too fast. So does that mean prices will just keep going up forever? Not exactly. Here's the twist. Rather than a sudden 2008-style collapse, we could see something even worse for homeowners: a slow bleed. Instead of prices crashing overnight, they could stagnate for years. That means homeowners who bought at peak prices might not see gains for a long time. And it's not the same story everywhere. Some cities, like Austin, Phoenix, and Boise, are already seeing price drops. Others like Miami and New York are still red hot. So where you live matters a lot. But here's the real danger: mortgage defaults. During the pandemic, tons of buyers took out adjustable-rate mortgages, ARMs. Well, guess what? Those rates are about to reset. If homeowners can't afford the new payments, and if unemployment rises, we could see a wave of foreclosures hit in 2025. So, is the real estate market going to crash? Not in the way you might think. Prices might drop in some areas, but a total meltdown? Unlikely. What we're more likely to see is a long period of affordability struggles, regional price corrections, and a potential foreclosure wave. Now, I want to hear from you. Do you think the market will crash, or are prices staying high? Drop a comment below, and let's talk about it. And if you found this video helpful, hit that like button, subscribe, and turn on notifications so you don't miss what's coming next.